My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. Good morning, Elmar. Happy Thursday, Russ, sir. Fred, Bill. It is a Veterans Day, so just want to say, thank you for everybody, who served in the Army, who were in the multiple wars in the past 100 years. So big thank you and appreciation. I had my family in World War II, so big appreciation. All right. This is my brief bio for those of you who are new. Welcome. Disclosures are very important. Please read them. Trading stock and options involve risk. And not suitable for everyone. If this is the first time you see the screen, I encourage you to visit optionscreen.com so you can understand the risk and suitability associated with trading stock options. I'm not a financial advisor, not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Sorry, I'm just writing down, reminding myself to update the slides. Keep forgetting. All right. Risk management is very important, right? Concentrating on things that are within your control. One is cash. I propose to have, market is choppy, probably going to remain choppy, for the maybe till the end of the year, potentially going into the next year. We still have government shutdown. Not sure if they will or will not pass. I think it got passed in the Senate. Now goes to House, the bill to reopen the government. So that's positive. Still unknown about Russia, Ukraine, China and U.S. relationship in terms of rare earth metals and the some of the restrictions and tariffs. Legality of the tariffs, right, in Supreme Court. So still a few unknowns, evaluations, right, AI evaluations, everybody's concerned about that. So it makes sense to keep 30% of your portfolio in cash and look at the portfolio drawdown. Right? So I propose to have, especially if you start new, if you're new to our platform or you're new to trading, start with 4 positions at a time. No more than 4 positions at a time, and not risking 2.5% of account value per position. This way, you know that if market sells off 5-10%, the maximum drawdown is 10% of your portfolio. I think that's the most important rule. At this point, you probably, I have a bullish bias. I think we're still going to revisit we're within striking distance of all-time high. We could potentially post new highs again this year, but we could also revisit October lows. So it makes sense to have, most of your positions bullish, but at least have one or some of your positions bearish. You can do this with, debit spreads. You can do this with iron condors. If you're trading options, if you're trading stock, you can, long strong stocks and you can short weak stocks, or you can short, or you can buy ETF that's inversely correlated to the market, like SH or PSQ, and that would also give you a short position. Avoid trading on emotions. These are some of the signs. Don't call the bottom process, don't call the top process. We're definitely building the top, I would say. You can see probably the top is set for probably maybe in the next few weeks. So I would, maybe trim the position once we reach the top, or the bottom. In this case, we're building the top process, right? We're building the top process. But don't call for the top, right? In terms of stock forecast toolbox, what the next model, still bullish. SPY is basically saying that in the next 10 days, we could revisit almost all-time highs around 690 level, right? But on the downside, doesn't see a lot of momentum, maybe 666, 666.5, but kind of choppy market up and down. So I agree with the 10-day prediction. 6 months, Again, for the months of November, 690 is your top, 630 is your potential support. So both outcomes are possible, but you can see at this point we're getting in overbought territory. Both short-term and long-term predictions. So I would use this as an opportunity to maybe trim some of your long positions. And if you don't have hedge, maybe add a hedge. So, well, since I'm on CrowdStrike, these are the signals from today. Active, you can find them in Active Trader. You can also find them in Yellow Tunnel, in Aggressive Power Trader. So we have CrowdStrike, Chevron, and Spiders. CrowdStrike, Chevron, sorry, and Allstate. These are the signals for today. If you look at 10-year yields, stable, kind of still pattern of lower highs, lower lows. Dollar is around, hovering around 100, right? We're unable to break through 100, so pulling back. That's also positive. High yield is stable, rebounding off of recent sell-off, but still below 200-day moving average. QQQ semiconductors, QQ 0.5% lower, right? We had a pretty strong rebound on potential reopening of the government and reaching an agreement tomorrow. So next level is this gap, right? Trying to close the gap of 625, 620, 625 on QQQ. Same pattern as spiders. What else? Silver continues to rally with gold, rebounding. Bitcoin trying to catch a bit, kind of been a weak asset class. And equal weighted S&P bouncing back as well, trying to reclaim 50-day moving average. So staying above 50-day moving average. If you look at the bar chart, not much has changed. So we're still at 6,700 as your main support, and overhead resistance is 7,000 on SPX. So 7,000 is the biggest positioning, right? In terms of open interest. So that's your main overhead resistance. But first thing first is 6,900, and on resistance number one. I mean, this is where we're trading right now, and the resistance number two. So we're at 6830. I mean, we're right at the 6,800. So I would say this is resistance number one. 6,700 if you're doing day trading. If you're doing short-term trading, few days. If you're thinking about a few days, a week, two, I would use this as resistance number two. October lows around 6,600, 6,550. So that would be about 18 points on spiders, and this would be about 10. And then not to risk more than $250 on $10,000 portfolio. And you just divide it to 50 by 10 or 250 by 18, depending on your style of trading, how long you're holding the position. Any questions? All right. Let's look at some of the earnings from today. We still kind of have earnings. So Rocket Lab Corp, right? We talked about this stock announcing earnings last night. So up 5%, sold the put spread. Occidental Petroleum sold put spread, bought call spread. So that looks good. That's going in the right direction. And CoreWeave sold put spread, but I think 20% out of the money. not 20% move, estimating 20% move. Call spread, debit call spread will, probably, going to be a losing trade, but the financed by a credit put spread. So, net positive response. So that's good. Let's see how fucking accidental petroleum continues to go higher. So that's good. ExxonMobil, so energy continues. So ExxonMobil is trying to break out. That's the trade from yesterday. So model did a good job, right, finding ExxonMobil. Over the weekend, these signals were posted on Sunday. CME, Macy's, Micron, TDC. Oh, it was Valero Energy here. I think it was Weekly Trader. No, probably Dynamic Power Trader, sorry. But Valero Energy was the signal, and then you have ExxonMobil is another signal. So energy continues to grind higher. From seasonality point of view, usually November, December is strong for energy. So it looks like at least XOM is breaking out and going in the right direction. Morgan Stanley continues to try to break out. Micron is down 2% today. SPX slightly lower. And still 2,800, 6,800, right? So it's sitting on that support 6,800, 6,780, right? The gap. So 6,780 is your support, right, for day trading. I mean, if it breaks down below yesterday's open, then you'll try to close the gap. Let's see what else. Caterpillar down 1%, ExxonMobil. All right, let's look at some of the trades from yesterday. I think there were a few trades after morning session. So I did exit Google at $4.60. Make sure that that's done. Sent. This was the premium service, right? Premium. So ExxonMobil was yesterday. So Google. So I'm out of the Google October 27th. Let's see. I don't think we posted, right? Okay, so let's see. Close. Okay. So let's make sure Google is closed. All right. Okay. And then we do have paid program. So let's send that again. Google and APH utility. So utility and AI stack. So let's send that as well. Let's look at Google. So it's a paid program. So I'll send the alert shortly. It's close to all-time high, right? Trying to break out. I would maybe put half of the position, but let's try that. So this is 11. Two. Okay. 18. Okay, let's take them out from the main program. So let's see, log out, coaching. Give me a second to finish it up. Casting for Bank of America. All right, so we have APH and Google. So let's do that. APH, comma Google. Okay. So Google, so we're going back into Google 300 call. So let's place that trade. And Google's trading right at the 300 level. So Vlad Karpel, trade option, Google. So we're going to December 19, 300 call. It's trading about 850. So the risk is even half will be more than $250. So I would, if you have a smaller account, I would do a debit spread, 830, see 840. Probably get filled for 840. Okay, so 840. So that's Google 300 call. And then the next one is APH, right? The utilities have been in general this is semiconductor actually. APL is semiconductor. Okay, sorry about that. Not utility, semiconductor. But it was APH, so it's semiconductor. And we're going into 150 call in December expiration. So APH, I like that. December, what did I say? 300 call, no, to 150 call, December 150 call. So about $4 maybe, and buy to open, $4. Let's see, can I get filled at 4? Yeah, okay, not the most liquid name, but $4. All right. So we'll add that to the list of stocks to watch. Let's see. Well, Google I already have. Let's see, Google. And then APH. APH. That, John, Fred, let me know if you guys have any questions on Google or APH. Okay. Let's go. All right, so let me know if that makes sense. Got the email. We'll do the credit put spread on Google instead. Okay, sounds good. Yeah, you can do credit put spread because it is overbought. I mean, the entire market is, or I would say, short-term overbought. So I would do either credit put spread or half of the position, because any negative news, and we could revisit the lows again, right? 600 and 600, that would be a buyer, right? That would be that's been a good, time to enter position. All right. Any questions on Discord or? All right. So what else do we have? Let me see. Do I see? It should appear there. Should only appear paid. Yeah, it doesn't. Okay. Okay. So Caterpillar, I added to Caterpillar yesterday. All right. This was during live trading room. ExxonMobil is going in the right direction. I did close Micron. So, getting into APH or Micron makes sense, right? And especially on pullbacks. What else do we have? Caterpillar. We talked about Caterpillar. Industrial, consolidating, right? You have well-defined support. I've been trading around this position. Maybe add again if we do get to 545 again. So I'm long Caterpillar, JEPQ. Right, this is one of my main positions, just kind of trading around this position for dividend. I mean, similar to QQQ, right? It's above 20-day moving, about 50. At 56.50, I would consider adding. What else do I have? Morgan Stanley, 160, 165 spread, expires in December. Not deep in the money, but it's in the money spread. So at this point, it's time decay, right? After November expiration, which is going to take, we have, after this week, 1 week left, right? 1 week or 2 weeks? Hold on, so let me think about it. Yeah, so we have this week and next. So basically, 8 trading sessions left. So after November expiration, you should have, more time decay in that spread. So it's going in the right direction. So that's good. So I have exposure to financial, industrials, technology, and now energy, ExxonMobil. 110, 150 at this point is in the money spread. Trying to break out, right? So now you have your well-defined support. I don't know, I would say around 117 is your breakout level at ExxonMobil. So that's going in the right direction as well. Any questions? Claude, Fade, Fred, Jason, Larissa, Lewis, Mahfouz is back. Welcome back, Mario, Dr. Simon, Patrick, Peter, Dad. If time, can you look at STX? Sure. What happened to QQQ? And I do have a QQQ put spread, 590, 570. I mean, it's down almost 50%, right? That hedge. I mean, your signal is the gap. If we do close the gap, then the spread would be down 50%, more than 50%. Then I would just exit, right? Because then this level most likely is going to hold. But if we do have any negative news regarding government shutdown, or again fear of AI valuations, or I think the biggest risk to the market is the government shutdown, right? If that falls back, right? If that doesn't get passed in the House, then we could revisit the lows. If it does get passed, I mean, I guess the initial reaction could be positive, or it's already factored in, but then you're going to start seeing unemployment data, and you can see that the economy is cooling, especially the employment market, right? There are a few companies that are continue to kind of trim their workforce, and if the unemployment rate jumps, right, higher than Fed anticipated, then potentially that could be the risk to the market. I would say that's probably the biggest risk short term. It's not reflected in the bond market, right? It's kind of stable, so I guess, but I think the ADP numbers were weaker than expected yesterday, so that's something to keep an eye on, right? That's something to keep an eye on. What else? Gold, silver, higher, staples, metals and miners. Let's see, let's look at the rest of this. Retail, still weak. Oil, right? So energy continues to move higher. Metals and miners are consolidating. After that pullback, consumer discretionary not going anywhere. Healthcare is breaking out. All right, so you do have a healthcare grinding higher. When is UNH going to start going higher? Well, it's not going lower. I guess that's a good sign. Utilities stable. Off of 50-day staples continue to be weak. Technology consolidating. Industrials back to 50-day moving average. XLF below 50-day moving average. Energy is going higher. Materials are weak. Home builders are weak. Biotech is strong this year, right? Strong price action in biotech. Lower interest rates. REITs. Equal weighted S&P. Kind of consolidated, not going really anywhere since September. So semiconductors pulling back today. 1.5%. Transportation is weak, also not going anywhere, and small caps retesting 50-day moving average again. Okay. Let's see. Accidental up 3%. Let's see what strike price did I put for accidental. Fred, did you sell put spread on accidental? Oh, STX, sorry about that. STX, forgot about STX. I mean, it's an AI play, right? Data storage, I mean, energy, all of this related to AI. Obviously, it's a very bullish price pattern breakout. I would be a buyer in pullbacks, any type of pullbacks. Short term, it's overbought. I mean, you can follow Fred's strategy and just sell put spread, right? Maybe 280 to 70 put spread, to 70 to 60 put spread. Or debit call spreads, and right, was the idea that if it does pull back to 280 to 60, you add, right? You add. You don't want to. If it drops to 260, you don't want your position to be down more than 2.5% of your portfolio. That would be my thought process. Ted, let me know if that makes sense. All right. Oh, so I did 43.44. Oh, so I'm in the money with the spread. All right. Let's see, close 43.40. So I did 43.44 call spread on accidental. So that's going well in the right direction. Let's see, what is it trading? 50 cents. So this is where you can, have a, you put a trade well-defined risk. I didn't do it in yellow tunnel because it's only Tuesday. But this is a trade where you can have these outsized returns if it's going in your direction. So let's see, I'll put it try to close for 80 cents, that 43.44 spread. CGCC review, place. And 85.84 put spread. Let's see, close. Let's try to close. So it's 85.84 on CoreWeave. It's still, far away, only half the distance. So maybe I can close half of the position. Let's try it for 12 cents. Okay. So all three trades are doing well. What else for earnings? Anything else interesting on earnings? Search. How are you? Okay, so Morgan Stanley, KKKS. Next one, I'm gonna put in order to try to close at 450 because it's already up, I think, about 10%, 40, 50 cents. So let's say 450. Okay, Fred, missing the trades from yesterday. Yep, thanks, Dad. Okay, very good. Okay, Rocket Lab is going in the right direction. Okay. Calendar, earnings. What else is interesting for earnings? Okay, Chinese companies started announcing. So how did SE? How's China doing? Not so well. Okay. So after the close, we have Beyond Meat, John's favorite stock. Right? He likes to short Beyond Meat. Should have shorted it here. It's almost $1 penny stock. Okay. What else? Not. I mean, Okla probably would be the most liquid, and Okla. It's a tech stock, pretty industrial machinery. Thought it's actually, is it? Why is it industrial machinery? Misclassified. Let's see. Maybe it's a software for industrial manufacturing. Engaged in fission reactors, provides clean energy. For fun. Okay. That was tech. Okay. Producing manufacturing outlaw. Average volume 19 million. So it's pretty liquid name. So that's announcing our earnings. That would be probably the only interesting after the close. Then tomorrow morning, on cloud, I like their shoes. So on cloud announcing earnings, it hasn't done well. I guess they're not selling enough shoes. And Tencent, TME. And Tencent music, that's also tomorrow. All right, any other questions? All right, meanwhile, let's look what else is interesting. Yield is stable, dollar stable, high yield is rebounding, high corporate bonds trying to rebound, VIX is at 17 print, QQQ slightly lower, Spider slightly lower, gold, silver. Bitcoin retraces most of its gains, so Bitcoin again pulling back. That's been a good proxy for risk taking, so I would maybe keep that hedge for now. Then what else? Wow, Plavin lost a lot of steam. 680 to 617. Close. Let's see. Let me know if you guys have any questions. Accidental.
That's not really going around your head. I jumped out of the plane. Thank you for your service, sir. You as well, sir.
Mr. Chair, okay, yep, thanks. Do you think the introduction of Bitcoin ETF will make Bitcoin less volatile? It looks like it's more stable, but it's still pretty volatile asset class. Right? I mean, you definitely have more institutions trading them, and it's more readily available, but you can see this year it kind of hasn't gone anywhere. I mean, everybody anticipated 100,000 by end of the year, and we're still at 100,000, same level we were, beginning of the year. Right, we're kind of at the same level as beginning of the year. Hasn't really gone anywhere, but I think institutions will provide some support, especially with new government supportive of Bitcoin. Okay, Morgan Stanley has been their top pick. Credit put spread on this one. I mean, I have Morgan Stanley. I think Morgan Stanley looks similar to Bank of America. I mean, I like JP Morgan yesterday. Kind of also tried to break out. I mean, you can see that the market wants some of the stocks is trying to break out of the range. I mean, they're overbought. I mean, maybe I would put a half a position because with anticipation that potentially we could have a pullback. Right, from these, I mean, short-term market is over, but and again, this pattern A, B, C, right? You have a A pullback, you have B rebound. There could be a C wave, right, on some kind of negative news because market is vulnerable for to these. Oh, top pick is Morgan Stanley. Oh, at Morgan Stanley. Top pick at Morgan Stanley. Okay, has Bank of America. I get it. I mean, I have exposure to financial. I think it makes sense to have exposure to financials. Yeah, I mean, if you don't have Morgan Stanley, I would buy Bank of America. If you already have Morgan Stanley, just again follow the exposure rules. But I like banks. And kind of market is just waiting, right, to look for a direction. I mean, we close this gap, right, on SPX 6,800, so that's your top, and we'll see if it's gonna. I mean, you have support 67.70 is your support. As long as we're above that level, then bulls will try to retest all-time highs around 6,900. All right, 905. Let's see. Anything else is interesting? How's Occidental Petroleum doing? This means GFREMX. Haven't seen REMX. I mean, I mean, 2 million, I guess it's not bad. What do we do? MP? I mean, same as MP, but this is, gives you exposure. So yeah, I think it looks good. If you want to have exposure, right? I mean, right now, as long as it's kind of correlated to US-China relationship, right? So when its relationship is, if there is a, contention, then stock rises, and if there is a peace and understanding, then it dials off. So it's going to be volatile based on these. INQ is flat, MP, IRAN continues to pull back. Pelletier pull back after yesterday's strong rally. And CCJ is pulling back. I think this is kind of, I mean, nuclear is policy, US policies, and rare earth metal is more politics, China-US relationship. We have mixed bag. Apple actually is doing pretty good. Meta is weaker, still weak. Tesla pulling back. And so it looks like energy is the strongest sector right now. 908. All right. Any other questions? Discord guys. Elmar, Trade Muffin, Ross. So we'll see you guys on Friday on Discord. Perfect. Okay, Ross, Elmar, Hydrated Muffin. Thank you guys. Yeah, MP has a government investment as well. I mean, just ETF, kind of you get a little bit diversification, but for now the charts look the same. All right, guys, that's all I have for today. Thank you very much and have a great day. Keith will be back at the closing bell and tomorrow morning, and then I will do the closing bell tomorrow. Thank you very much and have a great day.